What's good, traders and investors? It's Rod with Power Group. Welcome back on The Pursuit of Wealth. Today is Tuesday, April 26th. Hope you're doing awesome out there today. And in this short video, we're going to be discussing my current portfolio holdings percentage-wise. I had a lot of questions lately. What do I hold in my portfolio? And let me know in the comments below, what do you hold in your portfolio? Kind of reminds me of a Capital One commercial. What do you have in your wallet? Let me know in the comments below, though. Always love hearing from you. Again, I've been getting this question a lot lately, and with the market having a down day today, I thought it was a good topic for a video. Before we get to it, though, make sure to smash the like. It doesn't cost you anything, and it helps support me and the channel. Subscribe to the channel as well, and tick the bell. You'll be notified on any future updates. I'll start with the Twitter post that I made. So I did a pie chart here of the percentage of my portfolio. Again, let me know in the comments below what your percentage of your portfolio looks like and what the breakdown looks like. In my portfolio, currently with the geopolitical events that are going on, the inflation running rampant, so many unknowns and just uncertainties in the market, we know that the market doesn't like uncertainty, and neither do I. So the reason why I have 50% of my portfolio in cash, you can see here, half of my portfolio is literally sitting in cash and cash equivalents, and that is because we're in the everything bubble of 2022. Next is real estate coming in at 20%. So I sold two properties in the east coast of Canada. I bought them about 7 years ago and I sold both of them. I was completely all out last year in 2021. And that's basically how I amassed all of my fortunes. So I've made more money off real estate than any other asset class on the planet. Second to that was cryptocurrency. So I made the most off real estate and then the most off crypto. Let me know in the comments below what you've made your fortunes or what has been your best investment so far to date. But those are my two best investments. Obviously, the everything bubble of 2022, no one saw that coming. I had a friend who bought a house in Prince Edward Island, Canada, about might have been 4 years now. It's over doubled. When have you ever heard in the history of time where someone bought a house and within 3 or 4 years it over doubled in value? I mean, that is completely unheard of. But again, if you don't have a little bit of diversification, if you put all your eggs in one basket, you're not going to potentially reap these unforeseen rewards. And that was one of those examples of why it's good to diversify. So currently, just with the state of affairs and the everything bubble going on, I feel comfortable holding about 50% in cash. Like I said, 20% in real estate. I sold my properties on the East Coast, and I didn't want to rebuy higher, right? So I didn't want to not own property, but I didn't want to sell high and buy high. That's just not my investment philosophy. I buy super low and I sell super high. So now I was looking at, check out my video, my next big investment, and it was the Edmonton downtown condo market. I bought a condo downtown in Edmonton for $70,000, a one bedroom on the 14th floor. It's absolutely amazing for the price, right? And if you look at a condo, the equivalent condo in Calgary, you're looking at a couple $100,000 or somewhere around the 150 area. And the same condo going in the east coast of Canada now is going for anywhere from $200,000 to $300,000. So why would I sell high and buy high? So that's what I was looking at. It was Canada, obviously the oil industry starting to rebound as well. I think that's going to be good for oil country, aka Alberta, Western Canada. And then third, I have 15% of my investment capital into cryptocurrencies, and 10% of my portfolio and my investment capital is in MJ stocks. And then the last remaining 5% is mutual funds. So I have, right now I have aggressive growth and I have a select balance account, but most of my mutual funds right now, I would say, of that 5%, I would say 90% is in a money market fund. And a money market fund just basically means very, very low risk. Usually it's basically treated like cash, right? It's cash and cash equivalents. A money market is very, very low risk. And, if let's say the overall broader market were to fall, well, an aggressive growth portfolio mutual fund would probably drop, about anywhere from 10 to 20, maybe even 40%, right? Because it's aggressive. A balanced fund might only drop 10 or 20% if you know what hits the fan. But in a money market fund, if the whole broader market is selling off, you might only lose a few percent, right? And again, I'm not a financial advisor. Don't take this as legal or financial advice of any kind. This is for entertainment purposes only, and just to give you some insight into what I'm doing and what my strategy is. But again, majority right now is in cash, because what if the S&P 500 and the broader market and the everything bubble of 2022 bursts? We already know that real estate interest rates, I think in the US are over 5% right now, and the prices are just insanely high, right? So when interest rates go up and prices are going up, eventually it's going to come to a tipping point where there'll be no choice but to lower the price of the homes. And also what we're seeing is unemployment is still an issue, and also wages and salaries. The salaries and wages of people at least I can say in North America, I'm not too sure about abroad, but I know that I've been researching it, and the salaries and the wages aren't going up as much as inflation right now. We know that inflation's around 8 to 10%. Some say it's a lot higher than that if you factor in the old method of calculating it. But that's why we're seeing this discrepancy, right? And people aren't able to save as much because they're not making as much money. They're not getting any pay raises, and the inflation is going up. So you're left with less money at the end of the month, right? So again, 50% I feel comfortable holding in cash, 20% in real estate, and that's only because I'm very selective with my real estate. I did have about 80% of my investment capital into real estate a couple years ago, but like I said, I sold those properties. I went into the Alberta market, which is completely undervalued, in my opinion, to the rest of the world pretty much, but specifically North America. But I did want to say that there's other opportunities, right? This is just, I feel comfortable living in Canada. I didn't really look too hard elsewhere. I wanted to live in Canada, and I like the West Coast. I've never been on the East. I've been in the East Coast my whole life, and I've never been to the West. So I just thought it made sense and super undervalued. And like I said, next is 15% into cryptocurrencies. We know that the real estate market is still in a bull market, right? We're in, huge uptrends on the macro level timeframes, and cryptocurrencies are still in a macro level uptrend as well, weekly and monthly uptrends, i.e. bull market. And the reason why I only have 10% in MJ stocks is because we're in monthly and weekly downtrends. I'm going to look for this to change. So let's say the S&P 500 as well drops 20, 30%, enters a bear market like I think it will. Check out a couple of videos. I said this everything bubble is very resembles the it's very reminiscent of the dot-com days. Check out that video that I did. But if we see a huge plunge like we did in the dot-com days, we could see a 40-50% correction from the all-time high on the S&P 500. And that's why I have majority of my mutual funds in money market funds, because once we see a huge dip, I don't want to give back all those profits that I just made over the last 2 years in this everything bubble, right? It's S&P 500 up over 120% in a year. When does that ever happen, right? Again, real estate up 100% in a few years. S&P, most people are happy with 7 to 8% annually, and it's up 120, I guess it's up 1.2x, right? So you over doubled your money on an index like, a lot of indices really, but specifically the S&P, that's just unheard of, right? So again, until I start to see things change, I'll look to switch back my mutual funds from money market into aggressive and select balanced again. And then I'll look to deploy some of this cash when we have a huge dip. But also real estate, I don't plan on doing any moves with that. I might buy another property, rental property, and rent it out in somewhere in Alberta. I saw a lot of people, business people in Toronto are actually scooping up a lot of property in Calgary and in Alberta specifically, because they're able to not only benefit from the appreciation of the asset of the condo or the home, they're also able to make a lot of money passively off of the rental income. So it's kind of double dipping. But again, until I see cryptocurrencies enter a bear market, I'm going to own, right now I own more cash than I do real estate. I own more real estate than I do crypto dollar-wise, and I own more crypto than I do MJ dollar-wise. That's going to change over the next few months, I think, in my opinion. Once we see MJ enter a bull market, i.e. Weekly and monthly uptrends, I'll look to rotate the profits from crypto over to MJ. So once crypto enters a bear market, i.e. monthly and weekly downtrends, I'll rotate a lot of those profits into MJ, assuming MJ is in a bull market, aka monthly and weekly uptrends. So that is my portfolio breakdown. Let me know again in the comments below what your portfolio breakdown is. I actually did add some to my my TFSA today, MJ stocks, and remember that Canadians get a TFSA limit for 2022 of $6,000. You'll want to check with the CRA and make sure that you didn't over contribute or anything like that. But personally, I saved my TFSA contribution room for times like this. Look at MSOS. I added MSOS today. We're at an all-time low. And I also added a few other individual names today. as well, some LPs to my portfolio. But this is why I was saving my TFSA contribution room, because it can always go lower. And I've also got a ton of cash, right? In case we continue to dip. I also own multiple LPs. I own multiple MSOs. I own a mix of picks and shovels. So I have retailers and some ETFs in there as well. So again, let me know what your game plan is, what you hold in your portfolio. That is my plan. And one thing I want to touch on here is, if you're down right now in terms of MJ, like if you're just not just in your actual portfolio, but if you're feeling down, just remember that when we were in crypto back in 2017, 18, when we hit that blow off top, Ethereum hit $1,419. And then in 334 days thereabout, it dropped about 95%. It went from $1,400 to $80. And then in 1,066 days approximately from the low of that bear market, we went from $80 all the way up to $4,700 on Ethereum, which equates to about 5,870% thereabouts. And that took about 1,066 days. So again, this was a brutal couple-year bear market, right? And not a lot of people survived it. So does this remind you of anything? Very reminiscent of MJ at the moment, right? We dropped 95% plus on a lot of our names. And like the old saying goes, the longer the base, the higher in space. And look what happened to crypto. I think we're going to see something very similar to MJ once we start the MJ bull market. But I do think that we could be it's probably going to be another couple of months before we see weekly and monthly uptrends at least on MJ. And that's why it's one of my least, holdings, the least amount of capital that I have invested is because of the fact that we're in a bear market. Why would I put the majority of my capital in an asset class that's downtrending on the weekly and monthly timeframes, which is a bear market, right? I want to be in majority, but I still have exposure, right? So if we do explode, I'm okay either way. I'm okay buying the dips, or I'm okay seeing the rips, because I've been dollar cost averaging DCA all the way. When we're down 90+%, I don't care. I don't look at the price every day. When I see that we're at all-time lows, I set some targets and I dollar cost average. And that's exactly what I did today. I also saved some of that TFSA contribution room, and I'll be looking to save that for MJ, because I think the next big bull market is going to be in MJ. So again, my focus right now is cash, real estate, crypto, and I expect that to change over the next couple of months. What do we know that happened? Crypto, Ethereum, the merge of 2.0 got delayed. And then what do you know? Schumer delayed their bill. Just obvious. It's obvious it's plain as day, right? They do not want MJ to run until after crypto is done running. I truly believe that, but let me know in the comments below if you do agree with me, disagree with me. What do you think about my portfolio holdings? What's in your wallet and your portfolio? Going to end it there, though. If you could smash the like, subscribe to your channel, to the channel on the way out, I would appreciate it. And as always, we shall see you again in the next video.